Hey, good morning. We're in for quite a week. Uh, Rates are really good now. It's Monday evening, about 5 p.m. The 30-year fixed, everything continues to decline here. 6.625 on the conventional conforming with no discount, right? FHA and VA naturally in the fives right now with no discount here. And this is my new 5-1 arm fixed for the first 5 years. No prepayment penalties. We're getting that thing at 5.75% with just 1% discount paid by the buyer or seller and just a 5% down payment. This is a 5% product for any loan amount from 100 to 1.5 million. That's a jumbo loan with a 5% down payment in the 5%. I haven't seen anything like this in this rate environment for years and years. It's been a long time. Uh, the VA, yes, is still zero down, but this is a conventional loan, 5% down up to 1.5 million in the fives right now. A lot of people's magic number. And that 5 year period is probably enough. We're thinking anybody's going to refinance within 5 years anyway. But this is something I would explain very thoroughly to your potential buyers. Great product. All right, FHA update. As of May 25th, meaning if you're not in contract on May 25th, non permanent resident aliens will no longer be eligible for FHA lending. Okay. Point three here, they must be a permanent resident alien or a U.S. citizen. What that means to me, we don't have this on paper yet, but DACA is a temporary measure. I would think that as we learn more about this, DACA people are not going to be able to get FHA loans. Now, right now, bottom point here, non-permanent resident aliens still can go with conventional lending if they're first-time home buyers. That's a 3% down payment. But I think it's just a matter of time as the administration and Pulte, the new head of FHFA, Bill Pulte, just goes through and strikes this stuff out. I think we can expect that. It is what it is. So this is something I'm not sure I agree with, but it is what it is. And if there was ever a time to try to induce urgency among your clients who are in this situation, I think now would be the time on that. And of course, we will update you further as we learn more. Let's talk about buying before you sell without having to get a bridge loan. This is a no bridge loan option. What you want to do is on the purchase of the new property, you would go with a conventional recastable loan. What that means is when I lock the rate in, I call my rate lock desk and say this needs to go to a servicer that will allow a recast. Now, here's how it works. Initially, you go with a minimal down payment, say putting 5% down, even though you expect to make 300 on the sale of your home. Right now, we're going minimal down payment. When your prior home sells, you contact the servicer and you email, you wire them the proceeds that you would have put down at closing if your home would have sold before you purchased. You send them back that big chunk of change there. Your payment is then recalculated as if that amount was put as a down payment at closing. And you do have to make 5 or 6 payments on the initial loan prior to the recast because lenders want to make a little money for this, right? Cool thing about recast is that it costs a few $100 instead of paying 5 or 6 thousand to do a refinance just to get the same rate. It does not restart the loan term. If you're on a 30-year fixed, you've made 4 payments, you're on payment number 5 or 6 or whatever it is when the thing recast. And I'm saying different numbers because every servicer has different rules. It tends to be 5 or 6 payments, tends to be a few $100. So recasting is when the loan is recalculated based upon the lower loan amount. Let's look at an example here. Recast example. You are selling, expecting to net $300,000 in net proceeds. You're buying a $750,000 home. Initially, you want to put that 300 down, but we don't have time or you can't qualify for a bridge loan. That's okay. Initially, let's just put 5% down. That gives you a loan of $712,500, $712,500. The payment is about 4,500 principal and interest. I got that at 6.5%. We'll say we got 500 bucks a month in taxes, 200 bucks a month in homeowners insurance. Your initial payment on this loan, $5,200. Okay, so now your prior home sells. You move once. You move from the old house to the new house, no in between. Um, After you make your 5 or 6 down payments, whatever the servicer wants, the buyer, your client, wires that $300,000 to the servicer. They recalculate the payment. The new payment looks like this here: 2,600 P&I, 700 for the escrow here. The new payment is 3,300. So we went from a $5,200 payment to a $3,300 payment, as if they put that $300,000 down when they first bought the home. So this does not restart the loan. It only costs a few $100 versus thousands for a refi. It's conventional loans only. And I have to make sure I have the conversation with the client so that I earmark the loan to go to the right servicer who will allow for the recast. This is a great option. I've got 3 of these going right now. And it's a quick way to get things done without tying up more expenses in a bridge loan. And then, oh my gosh, we may have to make our house payment, our old house payment, and the bridge loan house payment here in a couple months all at once. It stresses people out. Just go with the recast option, bite the bullet for a few months on this larger payment, and then have the thing recast for you. So one more thing, we talked about this in the past. Rocket purchased Mr. Cooper, likely going to absorb Redfin as well. Mr. Cooper is the largest mortgage servicer in the country. Is that lightning? Uh, well, it is lightning. $2 trillion in loan volume, 10 million clients. And so the question we have to talk about is, when you see that Rocket Mortgage pre-approval, what do you think they're going to try to do with your client? Are they going to say, hey, come over here and work with our agent? They charge less BAC. It was perfectly timed thunder, by the way, for the scary story I'm telling, right? But if you see a Rocket pre-approval, please let me try to meet or beat it. Uh, as a sister company with you, we're here to keep your sphere your sphere. And you know what? That is what we have for you this week. Thank you so much. Y'all have a good day.